What's up, everybody? Welcome back to my channel, Earn It, Save It, Invest It. This is my week 10 of my road to $100,000 or my $100,000 challenge. This video is going to be a lot quicker because I had a crazy day today. I did a film shoot, so I was operating 3 cameras, a drone, a 360 camera. I was all over the place. Tomorrow I have a long trip to San Luis Obispo, so it's going to be very quick. I'm going to go over my road to 100,000, kind of go over what I did this week, what I kind of see over the next week, and just to quickly kind of go over it. So if you like my stuff, please give a like and subscribe. It's all I ask for, and let's get to it really quick. So as you can see, my road to $100,000 is at $8,690.21 on Seeking Alpha. Now that is actually, it went down a little bit from last week. And of course, when we look at my positions, HIMS, it went down. When HIMS goes down, it's going to most likely impact my portfolio negatively. The other week when I think it was Nike and Fubo both go up really big, it kind of countered HIMS. And that's kind of what happened a little bit, especially with, in the last week, HIMS went down about 17%, but then I also had TQQQ go up about 11%, and then Celsius going up 16%. Both of those still don't equal the same amount of weight as HIMS, so therefore HIMS still overall impacted my portfolio negatively because everything else was kind of a wash. But as you can see, basically HIMS was my big one down, TQQQ was my upward move, as well as Celsius. Everything else was, kind of here and there. It was crazy. Amazon was down 8% when they released earnings, and then it's up 3.7% of the week. Fubo was up 20%. When they announced, the deal is going to go through basically with Fubo or with Hulu, and over the last week they're down 1.87%. It's just crazy on how emotional the stock market is. I just don't get caught up into it. Since August 4th of this last week, basically, I have gone down $213. That's not including my $50 that I contributed. So I started at 8,800, about there, right? Put in the 50, lost the 213. It puts me at 8,690. Over this last week, I'm down 2.4%. So that is a lot worse than all the other indexes. Again, HIMS really kind of screwed me right there. But all the other indexes outperform me, and that's totally fine for now. Since I started this challenge, I am up $836 on my investments. So when I started at $7,354, I invested $500, right, $50 every week. This is 10 weeks. And then my investments have gone up $836 as well. That puts me at $8,690. So over this time frame from June 2nd till now, my portfolio has performed better than every other index except for the NASDAQ, which again, I'm telling you, the NASDAQ, when it comes to performing well, is going to perform the best. When it comes to performing bad and things are not going well, NASDAQ's going to be the worst. So that's my biggest competition. Again, once HIMS starts performing better from the point that I started this challenge, then things will get better. But I started this challenge at like a 300% gains on HIMS. So it's not like, for HIMS to grow a whole lot is going to be a lot harder than these other positions, which is, of course, why I'm not going to buy HIMS. I'm going to buy the other positions. If I'm on track, right, to make the $100,000 in the 10 years, long time, right? 10 years, 520 weeks. I should be at $8,124.40 this week. I'm obviously up more than that. I'm at $8,690, so I'm up at about, $570 something, right? $576. So I'm doing, or $566. So I'm doing good, right? And you can even think about, well, if I hadn't put in any money, right? If I just had not put in the $500, I'd be about at that point, right? But then I would that money wouldn't be performing, right? Some of that $500 is part of the $800 that has gained. So this is why it's good to just keep putting in little bits of money, a little bit of money in there, and it's all going to add up. So, my $500 is what I've deposited, and I've had $800 in gains. I think I could have done better too. Hims didn't perform as well as I want it to, but again, it's performed magnificently for me. It's just since I started the challenge, it really hasn't. But it's only 10 weeks. That's still such a short time frame. In this week, I bought 7 shares of Fubo, and I bought 0.1178 shares of Amazon, which was $25 worth. I ended up spending a total of $51.32 on these stocks. I am totally convinced about Fubo, the deal that they're going to do, the potential, the revenue, and all the income, everything they're going to be doing over the next couple years, I think is going to be significantly impactful to their stock price and just the business and fundamentals. Amazon, I think you're so used to paying a premium for Amazon, and right now you don't have to. Amazon still grows really well. It's a very good company. Granted, it is one of the top market caps, so it's not one that's just going to easily double. I understand that, but you don't pay a premium really on it anymore. So I feel like I want to build that position. That's one of my lowest positions, so I'm going to keep building on Amazon and Fubo right now. Fubo did release some earnings, and they also are not going to come out with any more guides because of this deal that's happening. So they're just going to kind of like stay away from that. Once the deal happens and goes through, then they're really going to start putting out more guidance, which again, when they say that makes you think that the deal is going to happen even sooner, right? You're not going to say, oh, we're not going to put out a guide for the next year. No, like they need to put out a guidance for the investors. So it's really looking like this thing is going to be solidified in the next, I'm going to say before 2026. I don't even think it's going to happen in Q1. I think it's happening in Q4. But a big thing that happened was in the second quarter, their adjusted EBITDA was $20.7 million, a $31.7 million improvement when compared to the second quarter of 2024, representing Fubo's first quarter of positive adjusted EBITDA. So it's a milestone that Fubo is reaching, and again, they're reaching this while about to cash in on this deal. They're going to have an influx of cash, they're going to have an influx of resources and everything. It's just going to be great. The amount of subscribers they're going to have able to reach to now because of it, it's just going to be crazy. So I think Fubo is in a really good position to grow. The net income loss from continuing options. So in the 3 months ended, last year was $25 million of a loss. Now it's only $8 million. Obviously, it's a lot better, and the adjusted EBITDA is almost negative $11 million of last year. Now it's $20 million positive this year. That's great. You look at the net income loss from continuing operations for the trailing 12 months, and as you can see, last year they were negative $237 million. This year they're positive $84 million. That's amazing. That is a big change. And then again, as you can see at the very bottom, the adjusted EPS from continuing operations, they last year were negative 4 cents, this year positive 5 cents. And this is while they're going to get into this deal. I think it's just amazing. Fubo signals Q4 2025 or Q1 2026 close for Hulu plus Live TV merger while launching new sports initiatives. I think it's going to be Q4. Obviously, when they first announced any part of this deal at all, they were saying Q1 to Q2 of 2026. Now they've moved that up a quarter, so I like that. Now, with everything, there's going to be risks and concerns. Management acknowledged the loss of certain ad-insertable content from Warner Brothers Discovery and Televisa Univision as a headwind for advertising revenue. Here's the thing, they're making a deal with Disney and Hulu. That can make conflictions, with other companies. So that's going to bring apart something. But at the end of the day, they're not saying it's going to be a really big change, but they did lose a little bit. The competitive streaming environment and consumer price sensitivity remain ongoing challenges. Streaming is everywhere, right? Netflix wants to do live sports. Amazon wants to do live sports. Everyone's trying to do live sports, and Fubo is mainly live sports. And then consumer prices, right? I mean, it costs like $90 to $100 to have Fubo. People don't want to do that. People want to spend Netflix is $12, $14, $15. I don't even know anymore, but it's probably like $15, right? Now I pay for my Amazon Prime TV, which is, it comes with my Amazon Prime anyway, which is like, I think less than $20 a month. So yeah, people are really sensitive with the prices because we all got, we had the cable, we all got upset at the cable, and then we had a few things that was like, oh, now I have everything in my few things, and now we're having to pay for 10 different subscriptions again, and everyone's just getting upset. So it's like, if you just slap on a $90 a month, $100 a month bill, like, hey, yeah, people are gonna be like, I don't know. So that's the one part that does, makes it a little bit harder for them, I guess. Now, this is my personal history on buying and selling Fubo. Obviously, I have a lot of history of it. I bought 50 of them. This was what? February 17th, somewhere around there. In February of this year, I was buying at $4. Then I was buying at $3.90. Then I was buying at $3.70. Then I was buying at $3. And then I was buying just under $3. I was buying all over the place. Then for some reason, I sold 400. I don't even know exactly why. When did I sell that? In April. It was right before a little bit of a crash right there, right? I sold at 303. And then I don't know exactly why I sold, but I did start putting that money into other places. And then obviously I started this challenge in June, which again is when I started to buy again. So as you can see, I started to buy at, all in around the threes, the 318, the 320, then I go into the 360s, the 350s. And it really just shows, if you just take your time, I didn't need to sell 400 at 3. I could have just held on, but, now that I started this challenge, I had to rebuild. Well, now I sold my shares, I had to rebuild my positions back up. So that's what I'm doing. And as you can see, I've just been buying consistently. I know about Fubo pretty well. I know the trends of it. And so, yeah, that was a really quick one. I'm extremely tired. I don't even know. This is my second shot at the video, actually. I did another video and I recorded no audio. My microphone was off. It's on now. I'm tired. I worked a long day. I have a long day tomorrow. I've had a long week. I got 2 children to take care of. But I'm still doing this. I have to commit. And everyone can commit a little bit. You can commit $10 a week. You can commit $10 a week, $5 a week to a stock, to something. And if you can't even commit that, then commit education. Commit some time just to understand it. Because I've been telling some friends and family this, and it's been difficult. I'm not trying to shove stocks down anybody's throat. I'm not trying to shove investing. I'm not trying to be someone who's trying to sound like someone that I'm not, as if I know everything there is about investing and that I know all the answers and that you should listen to me. But I do believe that being knowledgeable about investing, knowledgeable about the stock market is vitally important. Because if you were to go out there and ask 1,000 20 to 30 year olds, about the stock market, there'll be a lot less. Now, of course, the stock market has grown a lot more popular with, you don't have to pay commissions anymore, right? It's so easy with the apps, right? The internet and everything. It's just so quick. You have Robinhood, again, it's no commission. So it's just boom, 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 quick. Everything is just seemingly free and quick, right? To actually make a trade. Now, the result of your trade might be, profitable or losing money, but it's gotten so much easier now, right? And so you'd think that the youth would have numbers. I guarantee you no. I can guarantee you, if you were to ask 1,000 20 to 30 year olds about the stock market, they will have said, I've traded Bitcoin. I know, it's like, they'll say some stuff like that, right? Or, yeah, I know the stock market. I know Amazon. I know Palantir. Yeah, I know that stuff, right? They'll say that. You start asking seniors about the stock market, and they'll start telling you not just the stock market. They'll tell you about the Fed. They'll tell you about, like I said, the interest rates. They'll tell you about inflation. They'll tell you about economics. They'll tell you about what's going on with politics. They'll tell you about the actual stock market. They might tell you about PE ratios. They understand it because once you get to a certain age, this stuff becomes very important. Most of us are working. You are working, probably. Whoever's watching, you're working so you don't work, right? Most of us are working to save so we can retire. We're working to not work. So, once you get to that point of not working, this becomes so important. This becomes your work. This becomes the way that you can carry the cash that you've worked all these years for, and how to continue to grow it while still being able to pull out because you're not working. So, pensions are a thing of the past. Companies aren't paying for your retirement anymore. Now they're saying a 401k, no, you pay and you have to make the decisions. It's all on you. So, just to tell people, if you don't even have the money to put into stocks, at least put your mind into the education of how it works. So then once you do have money for stocks, you know what to do. I have made countless mistakes because I had some money and I had the ability and I liked it. And so I was diving right into it and I was learning along the way. But doing that cost me. It definitely cost me. And in the end, it will be worth it. But we'll all have to go through this. Now, would you rather have that costly experience as most of us will go through when you first start understanding the market, unless you just want to be very subtle index fund and that's it? You're going to make mistakes. And I'd way rather lose them when I have less money and I'm younger than when I am in my 50s and I have a lot less risk. No, I can't be making mistakes. This money, I don't know if it's going to grow back before I'm dead. To make the mistakes early, because you're going to make mistakes when you're learning. And so that's just my preaching at the end, is just to, I'm not putting a lot of money into this right now. I'm really not. $50 a week is not a whole lot of money, but it's more about what I'm doing every day and trying to learn about the businesses, learning about how to read the income statements, learning about how to understand the business, the stock market, the economy. And I know I am far from perfect, but I am continuously and constantly trying and educating myself regardless of my financial situation. There was times where I was not investing at all, but I was still trying to learn about the market. And there was times where I was just investing into the market and not learning a damn thing. And those were the times that costed me the most. So please, again, if you are watching this and you're thinking, hey, I don't have $50 a week, I don't have $5 a week to put, then put 5 minutes of the education into your brain a day. 5 minutes a day, 30 minutes a day. If you don't have that $5, then do the education. It's about to be 1 a.m. I worked all day. My tire popped yesterday, so I had to get a new tire today. I have San Luis Obispo trips. I can make a million excuses. This is my second video. The first video, I had no audio. No audio. I recorded for 17 minutes and 44 seconds, and I looked up, and I looked down, and I was like, oh man. I could have easily just excused and said, you know what? I'll do it another time. I'll figure it out. No. I said, I'm going to do it. All of us, all of you can do that. Just look into it. Figure out how it works. Because again, this is not just something that you're just, oh yeah, whatever. Yeah, okay. You will want to care. You will care about this when you're older. And if you don't, then it means two things. You're either super rich, it doesn't matter, but even if you're rich, super rich, you're going to care about the stock market. So it basically means you're the other thing, which is poor. And you just have no money in the market, and you're like, well, whatever. What the stock market does doesn't matter to me. It's not going to hurt or help me because I have no money in it. So learn now, make your mistakes now while you can, while it's cheaper, it's more affordable. That's just my opinion, my advice. So thank you for watching. It's my week 10 of my road to 100K or my $100,000 challenge. I'm excited. I want to get there as soon as I can, but I'm also not trying to get there as soon as I can. I'm trying to take my time, make good decisions, because, you can reach certain spot like Fubo, it reached $4. It went up 20% pretty quick, and now it's all dead. It's back down to 370. So reaching a certain point really quick isn't the goal, because it can drop back down. It can drop even harder. Obviously, Fubo is not that example, but I just want to consistently make it, and so that's what I'm just going to do. So again, week 10, my 100K challenge. Thank you for watching. Please give a like and subscribe if you're at all watching to this moment. You probably are not. Maybe a couple of you are. I'm going to go to sleep. And never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.